morning, everyone. My name is Jacqueline Cannon, and I am the director of the Wayne Community College Foundation. I just wanted to say thank you all for coming tonight. This is the first of our Arts and Humanities series for this spring, and we are very, very excited about the lineup that we have. I see a lot of familiar faces in the audience, so we're really grateful that you showed up and are supporting this series. I want to thank Dr. Pfeiffer for coming. And also Charlotte Brow. Charlotte Brow does a lot to help us with the planning of the Arts and Humanities program for the college. And so thank you, Charlotte, for being here and helping us organize everything. We're really excited about tonight's speaker. We have Brian Bolcar, and I'm going to read his bio very quickly for you. So in our ever-changing world in the digital age, we see a new form of currency that does not rely on banks and is not printed by governments. Imagine a currency whose value is unlike traditional currencies. If you are curious to learn more, which you are, come join us tonight. You will leave with a sense of what it is, how it's used, and some of the pros and cons of its usage. Brian is an employee of the North Carolina Investment Authority as part of the Office of the State Treasurer. His title is Portfolio Manager for Private Equity. Brian has a Bachelor of Sciences in Accounting and an MBA in Finance. He also has a CFA and CPA certification. For the last 20 years, Brian has been an investor in the private equity asset class, ranging from venture capital to large buyout managers, direct co-investments, and other structures. Since 2018, he has actively been interacting with institutional asset management firms in the blockchain and crypto sector. So please join me in welcoming Brian to our series tonight.
Hi, everybody. Thank you for showing up, except for maybe one or two people. So, as Jacqueline said, I work for the Treasury Department, and we invest in private equity. That's where I am. And so, tonight, I'm just going to, you already know about me, and I'm just going to go through this. I told Charlotte I was just going to come and wing it, but then I thought, I better have some slides, so if I'm boring, at least that way you have something to look at and read. So the first thing, a disclaimer. I'm not an expert, no degrees in this, and this is not any way a position by the North Carolina Investment Authority or the Treasury Department. I'm not here selling anything. And everything in here is public information, so you can access it. There's more information out there than you can imagine. I gave some of you sheets of paper which has resources on it, and there are some more up here, so at the end you can get those. So with that, we'll go to the agenda. So you have the intro, and what I'd like to do, if anybody has anything that they really want to touch on, you can point it out in the beginning, and I'm going to try and go through things pretty quickly. I talk fast, so if I'm talking too fast, just slow me down. If I'm not talking loud enough, tell me to speak up. And I want to make sure you understand the background and some context for cryptocurrency. So this way you'll understand a little bit how it came about and why it is, and then we'll get into the meat of it, the cryptocurrency overview. And this is not financial advice, as I said. Find a good registered investment advisor, a financial consultant. Jeff Jackson is here in town. He's the guy you should talk to, not me. And I think, you're about 110% invested in cryptocurrency right now? That's a joke. And then there's other stuff we'll hit on. And at the end, we have Q&A, so I want to make sure I leave time to answer everybody's questions. And the reality is, the worst type of question is one that's not answered, and this is an area that's really complex. So no question is don't be afraid of asking anything that you're afraid will make you, seems too basic. So my journey was back in 2018, I go to all of these meetings, and questions kept coming up on cryptocurrency and blockchain technology. I said, I need to learn this stuff. And so I wanted to understand the fundamentals of what this was. And I had people who at the gym would say, Brian, should I invest in Bitcoin? And I would say, I have no idea what it's worth. And back then it was probably around $2,000. And I said, there's no underlying financial information. Jeff, you can probably tell me the PE ratio on Microsoft. There's earnings, there's a product. And so there you can say what you think the value should be. But I said, look, the only thing I know is if you invest in that, just be prepared to lose your money because it's just based upon demand. And so with that, I was like, I want to understand really what is going on here. And the first thing I went to was cryptography. And as you can see, cryptography has been around for a long time, back into centuries ago. And then things like the Morse code or the Enigma machine in World War II, those were all forms of cryptography. And then what happened is you wound up having, it's called a public key cipher. It was another way of doing cryptography that had a private key and a public key. And then what happened in 1997, you wound up being able to do a digital signature with that public key and not have to tell people what your private key is. And the key here is it can be done anonymously, yet you can still find everything and trace it back. So you had the evolution of cryptography to where now in the 1990s, which was a long time ago, you could actually do this electronically. So I said, okay, I have an idea of what cryptography is. And then you say, okay, within that, what do I need to be able to do? And there's a bunch of different math, and you wind up having communication. And I said, okay, if you need all that, then you're going to be using the internet. And so all of you are familiar with it, I hope. Back in the 90s, you had Alta Vista, Netscape. You could go and look at a website. It was static. Then you had Web 2.0, where it's communication. And now what happened is you have Web 3.0. So that is the next evolution of the internet, and that really enables cryptocurrency. And there's some things there, blockchain, and I'll get into this a little bit more. So the key was, how can we use cryptography, and how has the internet evolved? So as I said, Web 2.0, that was client server and database. Oracle, massive database company, and you had communications, and it would be person to computer, person to machine, and then what you have with the Web 3.0, it is a distributed ledger. It's peer-to-peer, and it's blockchain technology. So now you don't have to go through a gatekeeper. You can go across a network. So Web 2.0, it's HTTPS. And if you look and you put into the internet, you'll always see HTTPS. That right there, there's a company called Cloudflare, and they do something called DNS security, which every time somebody logs in and you go to a URL, they're checking to make sure you're real. So in Web 2.0, you had communication. You can email, Zoom, Instant Messenger. You can do your banking online. You can execute stock trades. You have social interaction, Facebook, Instagram. And then you can look for information on Google, other search engines. And the key here is everybody can tell who you are. You have a specific identifier, an IP address. So that's why you can get coupons to say Olive Garden when you're going near Olive Garden. They track you. And the key is it's centralized. So Amazon, Facebook, Visa, everybody has to go through them. It had economies of scale, but they control the internet. And this really is being able to read, write, and communicate. It's person to machine. Now you get to Web 3.0, and this is what I thought was really funny. Whoops. The interplanetary file system. I'm not emailing anybody on Mars or Jupiter. I was like, what is this name? And it's the IPFS. And so really, it's not based upon an ID where it's an internet protocol address. It's based off of a content ID. It's called SID. And that plays into algorithms and hashing and cryptography. But you can see up there, it's a third generation, and it's open, it's decentralized. And you can see over there, it relies on blockchain. And so it has better security, efficiency, and transparency. And the key is it's called semantic, meaning machines can interact with each other. And what you have is you have it being decentralized, so the gatekeepers can't access your data. It's immutable. Once something's done, it can't be touched. It's much more efficient than having to go through a server. There's no single point of failure. It's trustless and permissionless action. And what it means down here is, oh, I was talking to somebody earlier. You can have anonymity, but you can have transparency to all the transactions. So I could get on and I could send a stable coin to Steve Wood, and it would only know it was my address. It wouldn't see, but we would do it that way. And so when people say, oh, you can launder money through blockchain, Web 3.0, cryptocurrency, you can't, because every transaction is able to be followed. And the key here is it has a big impact on AI and machine learning. So you have cryptography, and then you have the advancement in the internet. And this is just another slide. I told you I'm giving you slides. So semantic web and blockchain, they're the two key items. And what it really does is it allows the next generation of applications to be done. And if you think about it, I remember back when I would carry a big portable computer, or I didn't even have a cell phone. And now, this is more powerful than computers we had back in the early 2000s. So now what we're seeing is Web 3.0 enabling the next evolution of software development. Anybody have any questions? Yeah. We're getting right to the heart of the matter. Yes, and there's different ways to own it, and I can go over that later. And if do you want me to, oh, yes, sir.
Brian, just wondering, there's a lot of talk about quantum computers possibly being available 2 to 5 years out. Is it not possible they could break through the blockchain and the cryptography and hack into accounts?
That concern is mainly with Bitcoin and not the other cryptocurrencies. And that's being worked on right now, and you can actually increase the private key where it makes it exponentially harder to crack, and they're actually saying quantum computing can make it more resistant. So while it's a threat, it's also a way to solve it. So I'll go through this a little bit more quickly because we want to get to the heart of the matter. So blockchain technology, it's distributed, immutable, there's decentralization, it has, cryptographic security, and it has a consensus mechanism. So if you have Amazon working with transactions, they have to approve it. There's methodologies that allow decentralized verification, and that's a real key. And then there's two different types of blockchains, public and private. So you have the evolution of the internet, and now you have the development of blockchain technology, and it uses SHA-256, which that's encryption, and you were talking about quantum computing. And so now with that, it's like we've stepped up to where you can now have cryptography, the evolution of the internet, and blockchain technology to keep things advancing. And the way blockchain technology works, and I will show you this slide with some cryptocurrencies where they are. If you think about layer 0, that's like the ground. And actually it's probably the foundation of a house, not the ground. And then you have layer 1s, 2s, and 3s. And pretty much the blockchain is built on these. And you can see right here, that's the foundation. So that's Bitcoin, Solana, Ethereum. That's the blockchain, the public blockchains that keep all the information, that have security. Then you have level 2s. And if you think about a highway, if you're going up to DC, let's say the layer 1s are the highway. Those are the express lane. So they allow these blockchains down here to scale. And then layer 3, these are all the applications that are built on it. Decentralized exchanges, centralized exchanges where you can transact in cryptocurrencies and other instruments. So that's the way it's built. And this has an implication for the cryptocurrencies in a little bit. So the big watershed moment was back in 2008, this person or organization called Satoshi Nakamoto, he wrote the Bitcoin white paper. And a lot of it had to do with the great financial crisis, financial institutions having abuses, and him saying, hey, there has to be a better way to do this. And now that we have the Web 3.0, We've always had cryptography, we have blockchain technology. We can now implement something that allows distributed computations, distributed or ownership, and have the mechanism to approve everything be distributed. And it's really a fascinating paper. I read it, and it's brilliant. And really what it did here is he created a monetary system that allows all this to be executed and pay miners, they're called, to verify transactions. So that's the proof of work. And then it's a consensus mechanism that says this block is good and it sits here. It winds up being digital signatures, as I mentioned before. It's that public key cryptography, which was done back in '97. And then you also have the cryptographic hashing, and it's done on Merkle trees. So if you just think about a chain of blocks, what happens is every time something's processed, there's something called miners, and they do this complex mathematical computation, and they say, okay, that's done, and that block goes in, and they build on each other. So once a block's in, it can never be changed, and Bitcoin is actually the most secure system there is. It can't be hacked. It's never been hacked, and that goes to your question about quantum computing. But the computational power needed to go in and change all those blocks to get back to the information really is, it takes way too much time and computational power. And you've all read about the energy that's needed and things. That really isn't a roadblock, but that's called proof of work in mining. There's another consensus mechanism. Is everybody okay? Am I getting too deep? So here we have Bitcoin. So Bitcoin is called digital gold. And why do they call it that? Because it's only 21 million coins. No more will be made, and it's like gold. It's very scarce. And the amount of energy it takes to mine gold is way more than it takes to mine Bitcoin or prove those blocks that go in. And so that's why it's considered a store of value. It's pretty much the de facto or the only cryptocurrency where it's really a store of value. If you think about cryptocurrencies, think about it in three buckets: a store of value, Bitcoin, technology, and then transactions. And yes? That was it was back in the Genesis block, and it's actually in the governance. So if you're in another cryptocurrency, say Ethereum, they can issue more of those tokens, and what they can do is do that so there's development and pay developers. Jeff could tell you Microsoft can issue more stock. Companies can do that. It's a way to raise capital. But what Satoshi Nakamoto, whoever that entity is, said it has to be this way in order for this to continue to have value. And people who are verifying the blocks that go into the Bitcoin blockchain are getting paid in Bitcoin. Every 10 minutes a block goes in, and they're given a reward. And there's something called the halving that you may have heard about, and that means every 4 years the rewards are cut in half. And the profitability of those miners saying, we're going to verify that this information goes into this block, it's contingent upon computational cost and energy, and then they get paid and make profit if Bitcoin is worth more than what it takes for them to verify it. And that's done, pools of computers come together. So it's just the mechanism, and it's in the governance, and it can't be changed. Now, there was a Bitcoin fork, and there was a group that said, hey, Bitcoin should not take as long to get done. It should be quicker, because competitors came out. But that's never really taken hold. It's really, the real genius of it is to say, there can never be any more. Why is a Picasso worth $50 million painting? There aren't going to be any more of them. So he wanted to create scarcity value. And that's really the key to Bitcoin, and you have to believe that. Nope, the 1.2, I'm sorry. No, so the 1.2 million are what are given out as rewards to the miners for verifying the blocks. But it's given out in a value. So as Bitcoin price goes up and it's issued, the number of Bitcoins or Satoshis that are awarded goes down. And that's why the halving happens. So it's not until, I think, 2040 something, or maybe I think it's maybe 2070, where they will eventually run out of being able to issue them. But then it could be, hey, it'll be paid off of transactions. There could be other ways to monetize it. Charlotte, did you have a question? No, you're not. So you're not going to blockchain. I'll go through these pretty quickly. So this is just, there it is. If you can see the value of gold, how it's gone up. And the real key is that's considered a safe asset. Bitcoin was supposed to be like that, but it's considered a risky asset. It's actually gone from 126,000 down to 68,000. Gold's continued to go up. As there's geopolitical unrest, as there's concern, people will buy gold. So that has disconnected, and it's not playing out as expected right now. And this is just showing over time what Bitcoin did. And you can see over there, whoops, sorry. You can see over there how it was up at 126 and it came down. In the past, all of these down cycles corresponded to halvings. And now they're saying that that's disconnected. So that's just showing you how volatile it can be. But if you bought it back in the day, some people I know, they bought it when it was $10, and they've held on to it. And you can see what they have now. There's been a lot of billionaires made from this. And then that just shows how much it can go down from its all-time highs. So, as I was saying earlier to some people, it's a very volatile asset. It hasn't grown enough yet. It's still in its infancy for it to have less volatility. So that's Bitcoin. And we can go more into Bitcoin, but then there's other cryptocurrencies, they're called altcoins. And it's everything but Bitcoin. So now, let's say you want to buy Bitcoin, or let's say you want to buy some of these cryptocurrencies. Well, right now, if you want to buy Bitcoin, they have ETFs. They're really ETPs. So you can go onto your Schwab account, your Ameritrade, Merrill Lynch, whatever it is, and you can go in and there's different ETFs, IBIT, BTC. There's different companies that have issued them. BlackRock has IBIT. There's Grayscale. There's Fidelity. So what they're now doing is saying, hey, we want to give people access to have ownership in this. Just like gold. You don't have to go out and buy a whole bunch of gold. You can go and buy GLD on your brokerage account. And so that's one way to buy it. Another way to buy it is you can get on a decentralized exchange, which means you have to have a wallet set up. And that's a whole nother topic, but you go on and you're doing a peer-to-peer transaction. There's also centralized exchanges, which are like your brokerage accounts, but Coinbase, Gemini, that's where you go in, you have a Coinbase account, you say, I would like to buy $150 of Bitcoin, it charges you a fee, it executes it, it goes into your account. So you can either buy it natively, BTC, or you can buy an ETF for it. There's Bitwise, that's on your resource there. They actually do a lot of ETFs for a lot of different cryptocurrencies. They even have a vehicle, it's BITW, and that is the Crypto 10 Index Fund. So it's the largest 10 cryptos that you have ownership in, and they rebalance it, real similar to a passive index fund in public equities. So really, if you think about altcoins, they do a lot of different things. You guys have heard of NFTs, or you've heard of NFTs, Dogecoin, Shiba Inu. Those are called ERC 721 tokens. Why do people pay for them? It's what they want to. It's like a picture or painting. But you have decentralized technology, so Ethereum and Solana, those are two layer ones. You have DeFi, that's called decentralized finance. So you can do things like Aave. I actually went out and took a loan against my Bitcoin. I pledged Bitcoin, and they say, we'll lend you 50% of the value, just like you would on a margin account in your brokerage account. Stable coins, there's been, 33 trillion of transactions in stable coins in 2025 alone. And the retail transactions have gone from 314 million to 3.2 billion. And stable coins are what's being used for it. They're pegged to the US dollar, and rather than having to wire money or go through bank transfer, you can send it directly to somebody. And those are some of them. And then AI, there's tokens that play into the AI theme or artificial intelligence. And then you all have probably heard about Kalshi and Polymarket, where you can go in prediction markets. These are all different cryptocurrencies. There's thousands of them. Yes? So it's a good question, and I was in a meeting the other day with Sebastian. He's with Galaxy Digital, and his brother lives in Argentina, and they have really high inflation. So when he gets his paycheck, he automatically puts it into USDC, and then when he's ready to buy something, he converts it back into the local currency, or a lot of the merchants now are taking it in stable coins. Nigeria, big users of stable coins. So we actually are the slowest adopter in the US. And it's just really helpful for the US dollar because it keeps up these companies buying treasuries. And so that's a dynamic that we don't appreciate as much because we have dollars. But if you were down in Venezuela, all of a sudden your Venezuelan dollar, I don't know what it is, a peso, real, that $1 could be worth 75 cents 6 months from now. So you want something that doesn't go down in value. And so they can convert it real easily. You get in, you go to whatever application you have, and you say, I want to buy this number of US dollars, or USDC, or USDT. Yep. So, correct, but if you own Coinbase, Coinbase makes money off of USDC. There's a company called Circle that issues USDC. And now rather than, so let's say you go to the store or you go get a pizza and you use a credit card, it's $20. 4.5% comes out of that. The merchant pays it. It goes to the merchant processor. It goes to the credit card companies. It goes to the banks, the correspondent banks. Well, what they're doing is saying, hey, if you do a transaction, we're only going to charge 1/100th of a cent, 1/100th of a percent. So it's way, way cheaper, way, way quicker. But the companies that issue these do make money, that it's a very small amount off of a huge number of transactions. And you can. No, USDC is a stable coin and it's a cryptocurrency, and really that's used for, that's transactions. That's used for just paying like in the dollars. You can, if you have savings, you can have money in cash, right? And so if your money's in cash or a checking account or a savings account, that's the same as that. So Circle, which is a publicly listed company, they actually make money from it. If you own Coinbase, ticker COIN, part of their revenue comes from their distribution of USDC. Tether issues USDT. They make hundreds of millions of dollars, but that company makes it, the token doesn't. And so with tokens, it gets really complicated. There's governance tokens, and there's tokens where value accretes to it. And you have to understand. In Chainlink, if I own LINK, I have that token, but all the economics go to the company, and they don't necessarily put it over into that token. So I would not invest in those to make money, quite honestly. That's going to be the early adoption for cryptocurrencies. And the Genius Act, which came out recently, just got the regulatory environment set for stablecoins. The next act is going to be the Clarity Act. So what you've seen in this space is, even though there's a lot of volatility, even though there's a lot of negative talk, all the infrastructure and regulatory environment has made progress that's been quantum jumps in the last 6 months. And so now it's getting set up to where you can utilize cryptocurrencies in a more regulated environment and a broader basis. So if I go back here, this might help some. You have the layers, as I mentioned, 0, 1, 2, 3. And I put some information here, maybe too much. If you look at that, Polkadot, and there's 2 others who are on 0. I can't even remember all of them. Cosmos, sorry. So that allows chains to interact together. That helps the chains be built. Right here on the layer 1, that's where all the information's stored. That's Bitcoin, Ethereum, Solana, and what they do is they have all the information. It's stored there. Those are all public blockchains. And then what happens is, in order for stuff to get quicker, you have these layer 2s, they're called, and they just do all the work off chain, and they put it all together, and then they take it down and it gets put into that block there. Ethereum is working on scaling theirs and making it faster, but you have Polygon, Arbitrum, Optimism, and they have a different way of proving things. It's called proof of stake. So they get different stakeholders that all agree that a block should go in versus proof of work, which is the mining and really energy intensive. And it's kind of complicated, but just know these things are quicker. And then up here, up top, you have the blockchain layer where these are all the applications. And these are things that are being built like companies on here. The one that I mentioned, Aave, which is a lender, they're up there. Uniswap, which allows information to go across the different blockchains. There's a really interesting one I mentioned, Chainlink. So if you think about it, you have to take real-world data from all of our systems and get it onto the blockchain. Well, Chainlink is something called an oracle that allows the connection to these real-world to the current systems over to the blockchain. So there's companies now are being built on this technology that allows them to be decentralized and not controlled by one entity. And that's the real key to cryptocurrencies. The thing to understand is it's a blockchain technology along with the evolution of our internet that has allowed these cryptocurrencies and these companies to be started. Questions? Yes?
Distributed as it gains value. Is that a way to think about how the blockchain manages funds or not?
I would say the monetary system is the blockchain, and that serial number is the SID, maybe, or the content, the number of it. So you could say that's a location on there. I wouldn't necessarily think about it that way. The cryptocurrencies that are being created are now trying to create value where there's actually fee revenue. I have a slide. A lot of this is back like the internet bubble, which I was up in New York back then. I marketed with pets.com. We called it pets.bomb. And the CEO said, oh, well, we're going to sell all these collars for dogs. Yet they would sell a bag of dog food for $20. Their cost was $20, and then they had to pay $10 for shipping. It went out of business. So a lot of companies in this space that are being built on the blockchain won't be around. They're trying to solve a problem, and it's just like anything else. There's lots of startups. Some survive and some don't. But Bitcoin, if that fails, everything fails. And that really isn't doing anything except being a store of value. And then the USDT and USDC, that's transactions. Hey, how do we have a better form of the US dollar or better form of currency? How can we go ahead and take friction out of the system where we can transfer money and I don't have to pay any of these wire companies $20. If I go to my bank to send a wire, I have to spend $35. So why couldn't I just go in on my app with the USDC and send it to where I need to? It'll take a while for it to be adapted. So then we were talking about this as oh shoot. You have the store value, which is Bitcoin. You have the technology innovation, and you have the transactions. And all these companies and all these cryptocurrencies, you have payments, infrastructure, financial, which like Aave, Uniswap, service cryptocurrencies, and then media and entertainment, which NFTs and other things like that. So that's another way to break them down. When you think about the crypto, just like the stock market, it's broken down into sectors. You have biotech, you have healthcare, you have retail. That's the way cryptocurrencies are. And then the big one on the technological innovation is Ethereum. So I'll show you a slide in a second. All the projects on the layer 3s, or the vast majority, are being built here. The ticker's ETH, you can buy it. Its revenue's gone down because they lowered the management fees and they've also increased transactions, but that is the #2 cryptocurrency. And that is all about having the infrastructure so that companies can be built on top of it and the layer 3s can be built on top. What I want to highlight here is you can see a bunch of them. So that's Ethereum right there. You have, that's Binance, Smart Chain. You actually can't use Binance in the US. There's Arbitrum, which is a layer 2, Solana, which is another layer 1. But the one number to look at is this one right here. $90 billion, and that's called total value locked. That means that's representative of the projects being built on it. There's thousands. If you look up here, it's $6 billion. If you look there, it's $571 million. So pretty much, there are lots of financial metrics that you don't know about and lots of data on cryptocurrencies at different places. It's on the page I gave you. And so I just want to highlight that this is more than just something that I've had people say, oh, it's a Ponzi scheme. But it's not. There's technology and companies being developed and built. And this is just showing here, this is some real stable coin transfer volume. That's up to $3 trillion. So you can see that's each month. Mobile wallet users who are able to have cryptocurrencies is now up over 40, 50 million. Application revenue, there's lots of revenue now being made on these cryptocurrencies. They're generating fee income. And then there's something called spot and perpetual volume. These are futures on the cryptocurrencies, mainly Bitcoin. It's just like if somebody called up and said, hey, Jeff, I want to buy a call option on Microsoft. That's similar. So this is just to show you that there's lots of activity going on from a financial perspective. And on these companies that are being built, Aave, Hyperliquid, that's an exchange. You have Pump.Fund. They wound up issuing all the NFTs. You can just see that if you take Web 2 startups, OpenAI, what's another one? Together AI, Wiz, these are getting to $100 million in revenue way faster than they were. It took 4 or 5 years. Some of these are doing it less than a year. So these crypto applications are actually getting lots of traction and being used. And this is another slide that just shows it. One of my favorite ones is Hyperliquid. Ticker is HYPE. There's Pancake Swap. There's the Pump.Fund. But you can see how many, it just tells you how many days to 100 million in revenue. OpenAI. And I was trying to see any others. It's hard for me to see over here. Oh, I can. You won't know Wiz or Deal. Snowflake, you might. I know that one. But you can see how long that took to get to 100 million. And that's worth $50 billion right now, maybe more. So I just wanted to highlight that there's real businesses being built, and it's happening really quickly. Yep. That's the big question, right? And I actually have an article right here from Blockchain Capital today, and it actually addresses that. And it's something that I've known, but the reality is there's only one Picasso. Well, let's just say one of a Picasso. And it's a very liquid market. You have to go through an auction site. You have to pay 30%. So if something's not liquid, it's very difficult to get rid of, right? But that Picasso has probably gone from 5 million to 50 million over the last 20 years. So they've had significant appreciation, just like these NFL football teams, when you see what they go for now. 20 years ago, what did Jerry Jones buy the Cowboys for? 500 million? Now it's worth 15 billion probably. But here, it's a very liquid asset. So what happened was, I can go into a little detail on this. October 10th, where you had Trump say, hey, I'm going to use tariffs. All of a sudden, that created a lot of trouble in the financial markets. Things sold off. Now, Bitcoin, you can get lots of leverage on it. On those perpetual futures, 10x, 50x, 100x. So, and it's also a mechanism on here, they're called automatic market makers, where as the value goes down, you have to sell stuff if you've borrowed against it, and you have leverage, and you're doing those futures. So as the financial markets came down, all these hedge funds, they got calls because they used leverage. The easiest thing for them to sell, and where they had the most leverage, was Bitcoin. So they wound up selling. Then you had something called DATCOs, which I was going to... These are other things we can talk about, and we can go to question and answers. I have slides. But these DATCOs, how many have heard of Strategy, Michael Saylor? It's a public company, and all he does is buy Bitcoin. He was a software company. They make $100 million a year. And these DATCOs were using their balance sheet and leverage to buy Bitcoin. Then you had all the money going into the ETFs. And you had a lot of institutional buyers saying, I'm going to access it that way. So it was a big unwind. And the reason it went down and it's so volatile is because it's liquid. I could get in, I could sell my Bitcoin right now, all of it. My ETFs. Now, ETFs I can only sell when the market's open. But Sunday night at 2 a.m., you can sell your Bitcoin. Actually, let me go to this slide. So real quickly, stablecoins. You can look at, oh shoot. See stablecoins there? Back in the day, look at all, that was all Bitcoin, right? All the transactions. Then you look at Ethereum. Technology is being developed. There's projects going on there. And then you have stablecoins. Look how much of the volume it takes now. So stablecoin volume is really ramping, and that's showing adoption. This is just active users of stablecoins. This is the supply. Those are the transaction volumes. It just shows the growth of it in a short period of time. So you're asking, where will Bitcoin be? That's the $64,000 question. I don't know if it's necessarily a recession, but the thesis on Bitcoin right now is the United States has massive amounts of debt. And how do countries get out of debt? They debase their currency. So if you have the dollar becoming worth less, or if you have inflation spiking, the dollar becomes worth less. And you've seen Bitcoin. Remember I said the analogy was digital gold? It decoupled. It wasn't considered a safe haven asset. It's more of a risk-on asset. So in a recession, people might say, hey, risk off, and Bitcoin might not appreciate. The floor valuation based off of what it costs to mine a Bitcoin is right around $55,000. And what you're seeing now is it hit down around 60, and that's considered the floor. And so going forward, they're expecting more institutional adoption and usage. They're expecting the central banks to use it for a reserve currency. And then you're also expecting financial advisors to say, hey, we should have a small percentage allocated here. So there's expected to be continued adoption, and the volatility has decreased significantly, and this drawdown is much less than it was in the past, but it's still a highly volatile asset. And there was a lot of excitement when the new administration came in. They even founded a company, World Liberty Financial, and that family made more money off of cryptocurrency in a year and a half than they did their whole lives. And so you had a favorable outlook, and that ran up. And it was probably getting ahead of itself. And now you have the Genius Act passed, and you have the Clarity Act coming. So there's a lot going on, but unfortunately, the people who piled into it really wanted to make a lot of money quick. It's not a get rich quick if you bought it way back. But think about this. Say you bought Bitcoin way back in 2012, and it was 25 cents. And all of a sudden, it's worth $1,000. How many of you would have kept it? You would have said, wow, I made this. You probably would have sold it, right? So people come in and out, and that $100,000 level was a level that was thought, hey, this is sort of where I've really hit a home run. So if you've owned it for a long time, you're like, hey, I'm going to take my profits at $100,000. I have a couple $100 million. I'm going to go enjoy it. I'm not sure what the upside is. If you're worth $400 million and you own it, from that, why not take some money off the table? So there's a whole lot of dynamics going on that are impacting the value of it because it is a very liquid, it's not a security, it's a commodity. All cryptocurrencies are not securities. They're commodities, so they're technically an ETP, not an ETF. But what you can see here is, and this is right here, hold up. This is Bernstein, which, Jeff, you can support this. It's a really well-respected investment bank that has research. And this is one of the reports that came out in November. Digital assets, the rising titans of the blockchain era. And they have massive amounts of data and reports. So you have investment banks which are now covering Bitcoin and Ethereum like they do stocks. And so you have opinions on, hey, what is this worth? And most people will go back to, well, if that slide I showed you, if it's 1.2 trillion and gold is 30 trillion, what if Bitcoin should be worth 50% of it? So a lot of people are thinking that this will continue to be a better store of value. I mean, you buy an EFT for gold. How many of you carry gold around in your pocket? You know, it's not easily transportable. It's not easy to buy and sell. And so the theory is, this is electronic gold, and people want to own it to have some protection. Unfortunately, it's not at the point right now where it has so much ownership and so much adoption that it can't have highly volatile returns in the short term. But for me, I'm not a trader. I'm not good at that. I try and take 5 and 10-year perspectives and say, I'm not going to worry about what happens next week. And most people DCA, dollar cost average. So they just buy every month. And they do that with stocks. You might be able to do it with utility. I do that with my utility. Every month I buy $50 of the stock. But you can see here, these well-respected institutional asset managers and research houses say, hey, guess what? There's downside. There's upside, and there might be some place in the middle. And this is probably a 1 to 2 year forecast. But the problem is you can't go to financial performance. NVIDIA, why is the stock worth so much? It's selling tons of GPUs. They keep making more money. Now it's highly valued. This here doesn't have any underlying financial performance to say this is based off of this PE ratio, price to earnings ratio. It really is, what is the confidence that this can be used as a store of value and that this is sustainable and it is secure? So that's something you really have to buy in on. And that's why it's so hard for any financial advisor to say you should own it. If I go back to that chart, the volatility, you're more worried about protecting people's savings, right? And you usually see 1% allocation, maybe. And that's to Bitcoin. That's not to all the other cryptocurrencies. my personal opinion, and there's an individual, Alex Thorne, and he's the head of research at Galaxy Digital. I actually have one of the reports. And they traded, it was called an OG, an old guard. There was a wallet that had $11 billion of Bitcoin. And this happened back in the autumn time. And their desk wound up having that wallet, that person say, I want to sell this. They were able to take $11 billion and find buyers for it and execute that transaction. So there's lots of activity in it, and it's lots of institutional activity, and that's where all the volatility comes in. You have hedge funds who can use leverage, you can go long and short. Then as it starts going down, they start shorting it or selling it to buy it back later. Jane Street, there was some real controversy. They were selling every day at 10 a.m. They're involved with BlackRock on the ETF, so they had an idea of what the flow would be, so they were selling, expecting, okay, I'm going to sell it here, and because of what we see either for demand and things, we can buy it back at a lower price later. That happens in every financial market with every security. There's, the institutional flows have such a massive impact on financial markets. It's hard for us as individuals to really understand it. Did that answer your question or not really? We'll get AI. So I should have gone to this. I put this together yesterday. I thought I'd come up here and wing it. I told Charlotte I'm just going to talk about it, but like I said, sometimes it's helpful to have things to look at. So new cycle drivers. The 4-year halving, they say it's dead. So Fed policy, that's going to be really big. You have, who is it? David Sachs is up there, Tyler Williams, people at the CFTC and the SEC working on getting regulation. Back under the prior administration, you had individuals like Gary Gensler, very much against this. You had Elizabeth Warren, Sherrod Brown, who were focused on protecting people, but really what they were doing was squashing innovation. So now this administration is saying, we want to be the innovation hub for the US, for the world. Venture capital. You guys have heard of Anthropic or ChatGPT, which is OpenAI. We want to be the leader in that. We're bringing back lots of semiconductor production and stuff. So then you have the ETF momentum, regulatory, and then macro conditions. And this goes to your question about recession. Is it risk on or risk off? Is there going to be inflation? A lot of that will play into what Bitcoin does. But if you were to say what would happen, I can't tell you. If I could do that, I'd be retired with my own island somewhere. Let me go back here a second. You have, so Galaxy Digital, Pantera, Syncrasy.io. These are young guys who are really smart. They study cryptography. They invest in companies like Hyperliquid, Ritual, all these ones that aren't Bitcoin or Ethereum. And they're looking at companies that have real strong revenue, who have a sustainable business model. So that's a real interesting group. So you can go to their website. All these websites have research. Son of a gun. Bitwise, they're big into ETFs. They publish reports all the time. Matt Hogan's the CIO. Caprioli, they're out of Australia. They're more quantitative. That's more of a venture fund. Blockchain Capital has really good research. Up there, there's more research than you can ever read on every single subsector of cryptocurrency. Layer 1s, Layer 2s, Layer 3s, NFTs, stable coins, whatever. A16Z, they have a digital fund. Brevin Howard, that's a massive hedge fund that they have a digital asset fund. Accolade, they're small venture funds who are investing in these crypto startups. It's just like a regular venture fund, and they do that. Here's some people. There's Michael Saylor I mentioned. So these are just places you can go to, and these are websites, and you can have any information you want you'll find on there. I pulled some information from Amber Data. Artemis, you can get on there and you can sign up for a free terminal, and it allows you to pull up some things, and it'll actually show you different statistics, different aspects about the coins. So if I were you guys, oh, and then actually, if you like podcasts, I really like this guy, Raoul Paul. He's a big Bitcoin maximalist, so he likes it in the long term. But he has people in, and he's very thoughtful. He was a macro hedge fund manager. And then there's a whole bunch of other ones. What Bitcoin did, daily crypto news. There's a lot of stuff where you can just get on and listen. And the only thing I would say is there's a lot of slop out there. Does anybody know what slop is? Not farm slop. It's just you have Instagram, you have online media has so much. You have people who are pushing things, and this is the problem that cryptocurrency had. You had all these cryptocurrencies come out, and they had something called ICOs, or initial coin offerings. And you had the people who did it who were just pumping them, making up information. People were buying them. They'd run up from a penny all the way up to 60 cents. And then they would be selling, and they'd make a ton of money, and then you would hold something at 60 cents that's worth nothing. So that was one thing that hit crypto and why people were so cautious on it. Then you had NFT issuance, where Bored Ape Yacht Club, why are these things worth what they are? And that goes back to the Picasso point. Snoop Dogg buys one for $100,000. All of a sudden, these things are worth $100,000. Why? So there's been a lot of nefarious activity, a lot of things that, it was like the Wild West, and now it's becoming institutionalized. So for questions, fire away. I mean, it's kind of hard to know what to tell on something this complex. Yes? I don't know what the earnings are for Cloudflare. Have you looked at the financials? So I've actually met Matthew Prince, the CEO of Cloudflare, and that started out as a venture company. And lots of times, and somebody here knows this too well, venture can raise money based off of future expectations. And how those expectations play out, it's hard to tell. And so when you look at profitability, is it cash flow? Is it earnings? You know, there's a lot of different metrics in there, but they could be saying, we're investing for growth, and growth is worth more because if we stop the growth engine, our earnings will then kick in. So I haven't dug into Cloudflare. If you take Palantir, have you heard of Palantir? So I looked at Anthropic, and I do direct investments in companies for the state. Anthropic is probably 14 times revenue right now. Palantir trades at 40 times revenue. And a lot of these software companies that had IPOs a number of years ago, they came out at 35 times next 24 months revenue. Well, when the market got hit, they went down 70%. So HTTPS is just a protocol, and there's companies built around that. And so if you think about Web 3.0, there's now a lot of companies being built, AI companies, machine learning, and cryptocurrency. There's companies that are in the form of cryptocurrencies. And you might see some of these stocks. Actually, what's going to happen now is it's called the tokenization of real-world assets. BlackRock is tokenizing treasuries. There is a company called Figure, and they use the Provenance blockchain. Actually, Provenance is built on IBM's Hyperledger, which is called Fabric. It's a blockchain. It's a private blockchain. They actually tokenize secured loans. And what they can do is take the issuance of those loans from 3 months and 4.5% down to like 6 weeks and 2.5%. And then they sit there on the blockchain. So everybody believes that assets will be tokenized eventually. So now you're talking AI, but yes, they did. And so I was talking to, this is one of the benefits of my job and why I like it. I learned so much. I was talking to a venture fund, and one of their partners is an ex-deputy director of the CIA. And some people everybody has a different negotiation style. And so what I was told, this is between us, every military department uses Anthropic. And if you want to know which LLM, I can tell you. They have Opus, Sonnet, and Haiku. Those are the large language models that are used for AI. It's called inferencing, but they all use Anthropic. and the War Department uses it. And Anthropic has the best security and the best ecosystem built around it. And I've talked to companies who are implementing it. They like it better than Gemini. They like it better than Mistral. They like it better than the other LLMs are called, large language models. And large language models love blockchain because it can ensure the integrity of data. And that's a real key. So the department, the government came out and said, the problem is that the founders of Anthropic spun out of OpenAI because they said the biggest risk is, do we know how to use AI? And there's a lot of existential type of threats. You think about think about like the Matrix or iRobot. You know, oh, Charlotte, to your point earlier, you're a history teacher. I was at a meeting recently, and this is the first time I heard it. A person said, for the first time in the history of man, we shouldn't be reading history to help learn lessons. We should be reading science fiction, because that's going to be more what our future is like. And that's what Anthropic is worried about. And so Anthropic has certain rails on its LLMs. And no software company starts out saying, I want to build something to kill people. But Anthropic understands that this technology is vitally important to the security of the US. So they want the government to use it, but they want to make sure that there's proper security around it. And now it's a big war. Anthropic raised $30 billion at a $350 billion valuation, and then OpenAI came back and said, hey, we're going to raise 50 or 60 billion. So there's this race that's going on now. I don't know if that was too much information for you. What if I'm, oh, yes? Sorry if I'm getting too detailed.
You mentioned that it's a bit of the Wild West, and we're in a moment here that could be compared to the early years of the dot-com period. So that means there's a lot of opportunity for speculation, and that means an infrastructure is going to be built. So there's probably a few people here who are speculatively oriented, but some of us are probably thinking, what do I need to do if I'm just going to participate? Could you frame what's the timeline look like for when the average person needs to be fluent in working in this way, or will the average person be engaging?
So if you think about MS-DOS back in the day, you had to type in commands. I was terrible at it. Then they created a user interface. Now you click on everything. How long did that take? Let's call it 5, 10 years. Well, actually on Anthropic, they came out with Claude Code. And you now have code writing code. And that's the semantic web. You have software communicating with software to where you don't need software engineers and programmers anymore. And so in order to participate in AI, if that's part of what you're asking, right now, if you go to Anthropic and sign up for $20 a month, you can access Claude Code. And you can say, we've used it at work. I was going to have them do this presentation. It probably would have been a lot better. But I can say what I wanted to do. And I had a coworker say, do an attribution analysis on this manager. And it created this massive spreadsheet. So it's there now. It's just a question of people getting used to using and adapting it and learning enough about it to understand it's there.
It's so funny because until now I would have said these are two very different universes. I just finished an hour-long project with Claude for one of my classes, and it's helping tremendously, not coding, but I'm thinking more about cryptocurrency and what we're currently calling the wallets and trade. So if we're thinking about folks with checking accounts and credit cards and holding certain sums of money for cash flow, when would they need to worry about crypto and the infrastructure that is to come versus speculators? One,
I don't think they need to worry about the infrastructure. Two, if you want to speculate, I'm not going to tell you what to do. That's, I do what I do, and I don't mind doing that either. But you have to be willing to research the companies. Otherwise, I heard this statistic the other day. The time that a person spends before placing a stock trade, the average time is 6 seconds. So, if you're doing that, it's like, aren't you better off going to a financial advisor, looking at what you have, and making sure you can protect your money? If you say, I would like to access this, there's a lot of ETFs out there. The firm that I had up that's on your sheet, Bitwise, they offer ETFs. The Crypto 10 Index Fund allows you to access the 10 largest cryptos, XRP, Ethereum, Bitcoin, and they rebalance it. So I would say look at what ETFs are available and then do that in your account. But, if you're buying it thinking, ooh, I'm going to make a lot of money, so speculation, if you're really interested in getting into cryptocurrency, get yourself a wallet and go on a decentralized exchange. You can now use Phantom. Phantom is a really popular wallet. You can sign up. It's like using Web 2.0. But then you take your dollars, you buy USDC, and you transact on a decentralized exchange. Or just go to Coinbase, sign up for a Coinbase account. And you can get on there and see all their information. It shows you all the tokens. Robinhood now allows you to execute in cryptocurrencies. Schwab is going there. Yep. I'm a senior portfolio manager in the private equity asset class. Sure, but you can't access that because they're private funds. So, and you can, let me think, A16Z, we just made a commitment, and that's their venture funds. But their minimum investment is $5 million. You have to be a qualified investor. You wouldn't want to be in it. It's locked up for 10 or 12 years. You have to pay management fees. They take 20% of the profit. And the state does not invest directly in cryptocurrency. The only exposure we have is tangential. So whatever we have in passive equity via Coinbase and Strategy, that's what our exposure would be. Because that's a big decision to decide to jump into cryptocurrency. But we invest directly in other companies. We've invested in TikTok, and we did that back in the H round, and then we subsequently sold that. So we do venture. We do buyouts. We give money to private equity funds where they might raise $5 billion, $1 billion, and we say, okay, we're going to give you $250 million. Over a period of time, they invest in companies, they run them, and then they sell them, and we try and get 2 times our money and 20% IRR net.
Okay, we're going to go ahead on and end the lecture here. Thank you for such an insightful lecture. Please feel free to come up to him and ask some questions.